All right, guys, we're back, and this is a very special episode. This is now something that impacts us all. We are with the mortgage group, some good friends of mine. So I'm going to allow them to individually introduce themselves, starting with Brian.
Brian Robaina, the mortgage group. I've known Eddie for a very long time. He was my quarterback.
Yeah.
In our flag football team. So I appreciate you having us here.
Pleasure.
And getting us going, because without you, we wouldn't be here, man.
Good, man. I'm happy about that.
Kameron Senamar. I met Eddie with Brian and had a really good experience so far, so I'm really excited to be here. And
Sounds more like a marketing plug right now.
yeah.
How long have you guys been in the mortgage business for? Finish introducing yourself, and then we'll get into that.
So Manny, also owner of the Mortgage Group. Eddie, thank you so much for having us here. Ready to talk Miami, ready to talk mortgage, ready to talk anything real estate. So appreciate you having us here.
My pleasure. So I know that, again, this is something that affects all of us, okay? Everyone's dream is home ownership. Most cases, I mean, that's like the American dream that has been significantly impacted earlier. But I know that when you do have a client and you get them that house, right, they cry, or it's like a static feeling. Tell me a little bit about like what that means to you to actually help out a client and get them across the finish line in a process that it can be extremely complicated and difficult, especially in a city like Miami. It's expensive.
I'll start off. I guess I have a really good testimonial probably 2 or 3 years ago. Actually, when me and you started, when I was in Wells Fargo, and I closed the client, I basically, it was towards the holidays, so November, December type of area. And for me, when I closed her, gave her the keys, and it was right before Christmas, and I'll never forget her text message. I'm celebrating the holidays at my home because you mate it happen for me.
That's great.
And for me, it's not just about the money, it's that, and those clients are the ones that are always going to come back. So for me, home ownership is very, very important.
Bro, I'll tell you, when I started it, that I had met you, I was a realtor. For those of people who didn't know, I did real estate for 5 years. And I would get a lot of first-time home buyers. And it was a situation, driving them around for 6 months everywhere. They can't get approved for things. But I always said, if I'm going to do something, I'm going to do it right. I was always a person who pick up the phone, who go out there. The thing is that's a business that you can't, it's hard to work part-time, And whenever I would get someone who thought it was impossible to own a house, man, I would feel like crying with them and seeing how happy they were. And I was like, wow, it's amazing,
I have a similar situation. 4 years ago, I met a client of mine that was applying for a mortgage at another bank. And they went 3-4 weeks into the process, and essentially the loan ended up falling apart at that bank. I got a call from the realtor who asked if I could help out, and it was right before a hurricane. And we ended up closing that client's loan within 2 weeks, right before the insurance companies shut down because of the hurricane. And he ended up closing, and I've gotten multiple referrals from him. He's come back for refinances and other purchases on investments. And when you help out first-time home buyers, it's a very rewarding process because, like you said, you drove them around for 6 months. They have no idea. So they're like your best friend, right? They're constantly calling you and asking questions. And when you do help them and get them home, it's a good feeling. And it's what we get up for every single day to do over and over again, because it's what at least for me.
Yeah, to a lot of people, it might just be a name or another document and stuff, man. But to them, that's their life in most cases.
Yeah, Eddie, you said it perfectly, man. It's the American dream, right? Yeah. So we're all, at least I know a lot of us here in this table are sons of immigrants, right? So what is the American dream for a lot of our parents that come to this country is owning a part of it, right? And owning real estate. And I think one of the most important factors that we play in the first-time home buyers' dream of becoming a homeowner is showing them how you can create generational wealth through home ownership, and how they could essentially set their sons and their daughters up for a successful life through a transaction that is going to be very meaningful down the line. So you've put it best there.
Yeah, it's kind of like an opportunity for you to have like a nest egg, at least worst case scenario down the line, I'm sure you guys, just the same way you get good stories, you guys get some interesting stories and people that go by there. Yeah. What do you see like right now? You guys are on the streets, you're talking to people. What do you see people struggling with the most right now to like get a mortgage? Like, what are like the top 2 or 3 things that you see that like they're not qualifying because of X?
I'll take first shot at this one. So, Eddie, I'd say 80% of Miami are self-employed business owners, right? And a lot of these self-employed business owners will do everything within their power alongside their accountant
To avoid taxes?
to essentially pay as little as possible to Uncle Sam, right? Which is another reason why we decided to open up our own company, is because we wanted to have avenues for individuals like this that, hey, listen, yes, I own a mechanic shop, I own a assisted home living, but I'm not really reporting $100,000, $200,000, $300,000 in actual revenue at the end of the day in your taxes, right? So us being on the brokerage side of mortgages, we're allowed to kind of shift and pivot to different programs that can help individuals like this, like bank statement programs where essentially, hey, listen, we don't need copies of your taxes. All we need to see is 12, 24 months of bank statements, and we're going to average out the deposits that come into this account to qualify you for a mortgage. So Miami is, like you mentioned, a very unique situation. We see it all the time where individuals are coming at us, giving us copies of their tax returns and showing, hey, listen, I made $12,000 last year, right? I want to buy this $1 million home. And the reality of the situation is you're not going to be able to using those taxes, but we have ways to where you could pivot and get you in the right product to get you that home that you want.
Yeah. Well, that's the benefits, I assume, of going to a broker, a guy like someone like you guys, than going to the bank, no?
Yes. I mean, we're not captive, right? So we're not locked into a box. We have a plethora of different products that we can help out consumers, like Manny mentioned. So if you're self-employed, we'll go bank statements. We'll go profit and loss 1 year. We'll go profit and loss 2 years. We'll go verification of deposit. There's a ton of different products that are available for self-employed consumers that will allow them to get.
And what, traditional banks don't have that?
No. You go to, I'm not going to mention any big bank names, but we all know the big banks, right? And they really want cookie cutter stuff. And the big banks are really there because of your deposits. They're constantly, rinse and repeating that stuff.
Gotcha.
Whereas brokers like us, all we're looking to do is help.
Yeah, you're eating off of, producing loans.
Well, no, we want to help people
Of course.
be able to get, and people have this misconception that, I'm going to go to my bank because I had bank with them, right? That's a typical Miami thought. And unfortunately, to them, you're a number. And we worked at a big bank. We all did. And every time we would log in, it wasn't even with our own username, like K Senamar. We were a number to them. So that should really speak volumes to consumers. When you're going to a big bank like that, you're a number, you're a wheel, you're a spoke on the wheel, know, whereas with us, you're going to get the white glove service. Correct. We're going to look into your income, your assets, and we preemptively look at your taxes and your insurance and your deposits ahead of time to.
Yeah, and you're building like a personal rapport too.
Yes.
Not that but I'm sure that gets taken into account. Like, listen, hey, these guys are legit. They're on the right path. Obviously, there's a numbers situation to it too.
What we do, we end up knowing the buyers more intimately than their own family members because we know their financial DNA.
Yeah,
so it's important. The more information the consumer gives us, the more we can navigate the minefield and make sure that they don't.
That, and I think like it's. Selecting the broker you select with and including the realtor you select with can make or break your deal.
100%.
A person who's not responsive. This guy, he was always responsive. And you have to be on point, man. Yeah. The bank is requesting this, the buyer's requesting that. If you're not moving like that, I'll do it tomorrow, I'll do it later. You're too busy. Albeit that you're losing that deal.
The three of us are always in communication up until 8, 9 o'clock, just brainstorming on what we need to do on whatever file, whether it's mine, his, or his. We're constantly texting, talking, whatever it is.
It's important to know what's going on from the beginning to the end, because like you said, realtor, title agent, listing agent, buyer's agent, everybody wants to know what's going on. So if they don't know what's going on, then it looks like we don't know what we're doing. So,
correct. And you guys are like the glue that holds everything together.
Yeah, exactly. Yeah. I have a saying, you got to be quick to deliver good news, you got to be quicker to deliver bad news.
That's a good one, Damn, man. This guy's a good one, bro. Okay. Now, so one of the main situations was self-employment. What is like another reason that you see people majority getting denied right now?
Take it, brother.
Coming off of what Manny and Cam said, they don't report the income that they make. So basically, they're putting expenses in because they tell their CPA, hey, listen, I don't want to pay Uncle Sam this amount of money. put as many expenses as possible. So that's basically the biggest problem we come across when it comes to self-employed borrowers. So all these other programs we have, the bank statements, the 1099s, the P&L, they come into play. So it allows them to purchase a home without having to pay Uncle Sam. So that money that they would pay to the government, they can use that money now to put it into the house and build more equity.
One of the situations that I saw, at least when I was a realtor for a while, was the loan to value ratio. So you would go get a property, get the mortgage quote on it, but if the property taxes were too much, or if maybe the amount was the right way, but the taxes were too much, or if the insurance is too much, you wouldn't qualify.
I think what you're referring to, Eddie, is the debt-to-income ratio.
Debt-to-income ratio.
The
Yeah,
debt-to-income ratio. So the debt-to-income ratio is kind of black and white for a lot of these deals. It's kind of the bank is going to look at what comes in on a monthly basis and what goes out on a monthly basis. So another issue that we all see on a daily basis is issues with individuals' credit status, right? So mom, dad, unfortunately don't have good credit. They knock on son or daughter's door and they're like, hey, listen, we need a new car. We need you to go into the dealership for us and put your name down, put your social security down so you could get this car for us, right? Now, day comes around where daughter...
Wait. I'm going to ask this a different way, okay? And then you're going to repeat the same answer. So for those people out there that have family members asking to use your credit, what is the advice from your personal experience that you've seen with mortgages? What is your advice to people who are asking to use a family member's credit?
Don't do it. So we see it all the time. We see it on a daily basis where an individual comes up to us and they tell us, hey, listen, I want to buy a house. I have this great job. I have a lot of money saved up to buy this amazing house that I found. And then we're going through the process of getting them approved for the property themselves. And then we notice on their credit report, hey, why are you paying $600, $700 to BMW? And they're like, oh, no, don't worry about that. That's my mom's car. And unfortunately, even though it is their mom's car or they are the ones who are paying for it, it's coming up on their credit report, right? So this is something that the bank is going to take into account when they're approving them for a mortgage. And majority of the times that payment, that monthly payment, that even though they're not paying for, does affect them in the long run and prevents them from getting qualified for the mortgage that they need.
Have you had situations where someone comes in, they're like, wait a minute, I thought that was being paid for, and then they find out they haven't paid it in 90 days or something?
Yes.
That's actually
No way.
Or they say, no, I don't have any debt, because one of the things I like to do with clients is, hey, I'll take a full application for you. I won't touch your credit until you're ready to touch your credit. But you got to be honest with me. What debts do you have monthly? No, I have a credit card and that's it. No car payments? No. I pull the credit, 3 car payments come out. Oh, no, that was my daughter, my son's car. But you told me you didn't have any car payments, and 3 come up. So that's something else that happens a lot as well.
So to Manny's point,
I got another one for you guys.
there are ways to make those 3 or 4 car payments disappear off of your debt-to-income ratio. So if Manny, let's say, co-signed for his mom's driving the car, and Manny's mom's making the payments from Manny's mom's account, and she can prove 12 months, we can omit that from the debts. So and if you have a business and you're paying for it through the business, that's also a way to eliminate that debt.
Yeah, and that's something that a traditional bank won't do.
It's the loan officer
has to go above and beyond.
Right. They have to know how to navigate that.
And that doesn't happen often. You know?
No.
They're just trying to go for the low-hanging fruit.
Basically, yeah.
All right. So you guys are in the business, and you're seeing everyone left and right credit reports. What is the average credit report or credit rating or credit score that you usually see?
I would say between 660 and 720.
Yeah.
Okay, that's good.
Yeah.
That's the average. That's a standard score for someone to be able to get a property, no?
Yeah. We can go as low as 520.
Oh, wow.
But there's restrictions on it. There's extra fluff that needs to come along with it. It's something that we call compensating factors. So if you have a 520, you got to have compensating factors to make up for the negative credit score. So we go through that with the client.
Wow, so a credit score doesn't necessarily mean you get approved or you don't get approved.
No.
There's determines what, your interest rate?
Yeah.
It's not just one shoe fits all. We look at it on a holistic view, right? So we look at your credit score, we look at your income, we look at your assets. It's everything that's going to determine on paper if the bank is going to say yes or no.
Have you ever had a situation where someone gets you're pulling the credit report and they're like, how the fuck did I get like that? Or like anything like...
Oh, wait, we're cussing? Nice. Let's do it.
All the time. I tell them, they give me my FICO. Oh, no, it says here I'm a 740, and then I pull the credit 689. So that happens a lot.
Yeah, we
And they're
get
like, how did that happen?
we get that all the time where a borrower is going to send us a screenshot of their Credit Karma account where they're like, hey, look, I have a 640 score. And then when we actually pull their credit score from 3 bureaus, they have like a 580. To combat that, the good thing about us is that we also have instruments and tools where we could increase your credit score and do things where we'll run through a simulation and be like, hey, listen, Eddie, pay off $1,000 on this credit card, put $500 on this credit card, and all of a sudden your credit score goes from a 580 to a 620.
Yeah.
So we have those instruments that a lot of other big banks don't. So
Yeah, that's a good thing because I know Brian, at least when I used to work with him in the past, he gives you like a roadmap. You know, like, hey, do this for the next 12 months, and then you come back to me, you'll be in a better position.
And we actually have it where it's within 30 days. So it's not even a 12-month thing. Hey, you pay these 3 cards down to and it's not even to zero. Just bring down the balance to this amount, and your credit score goes up 40, 30, 50 points. That's it.
Well, I'll tell you a secret. When I used to tell people, when I used to help them on those cases, I would tell them, call your credit card company and ask for a credit limit increase. So that technically lowers your ratio.
Yeah.
Right?
Yeah.
So make sure you're paying it off a month or two, and then say, hey, can you give me another $3,000, you know, and then that'll increase.
Yeah, that's actually a very good idea.
You know? So you actually pay a little bit down, but ask for the increase up. Because what they want to see is that 30% below.
Under
Correct.
30%.
Yeah, under 30%.
Correct.
Yeah.
That's the key. That is the key right there. But moral of the story, don't trust Credit Karma.
Yeah.
It's good for notifications, but it's never accurate with their score. Like it'll tell you, hey, good job paying down your X card or your Y card, and it's good for that stuff. And especially if we're doing a credit refresh or trying to improve the credit score, it'll alert you that, hey, something just happened on your credit, and that would be the other indication to give us a call.
Where do you see a lot of people now, you know, moving towards? Like, in what part of the city do you see like a lot of activity going on right now?
I would say south. I think Homestead is being really picked up. Yeah.
I've always said that I think Homestead is going to be Kendo in 5 to 10 years. Yeah. Like how Kendo is now Kendo Drive, all the restaurants, all the businesses. I think Homestead is going to that. They're building a whole new community right across where I live, and I live right by Black Point Marina, and it's blowing up. Yeah. So I feel like Homestead is going to be. I just feel like your bang for your buck.
100%.
At the end of the day, it's a numbers game, right? And like there is so much space within the city themselves. And I know you had the commissioner on the other day, and he was talking about the Kendall Parkway and the feasibility of having roads and accesses to be a little bit further out from city central is going to be massive. Like Brian mentioned, down south, Homestead, Florida City, there's a ton of new constructions happening just because, again, these new construction companies were smart. 5-10 years ago, they bought massive plots of lands out there, and now it's when they're capitalizing and building these new construction homes. And again, what you're getting down there is essentially you're paying maybe 75-50% of what you would be paying to be in the city center. So a lot of the new construction is essentially shifting the game, in my opinion, like Brian said, a little bit more down south. So
yeah, well, I think that's like the only natural place for us to go regardless, because we can't go west. We're going to cut it more into the Everglades, which they eventually will do anyways, you know. I wanted to ask you guys, because you hear these stories all the time, what makes a good realtor? Like, you guys must work with so many realtors. And I know there's a lot of us out there, or a lot of you guys out there, and I know everyone loves real estate, and it's good, and everyone has a real estate license in this county. But what is the differentiating factor of, like, who are the realtors you like to work with?
I'll start this one off. You have to be a dog. So you have to be out there. You have to be able to go into the trenches with your borrowers. You have to be able to fight, negotiate, especially now. I don't know if you know, but as of August 17th, a few additional rules came into place through this NAR settlement where before a buyer, essentially their buyer agent commission would, by quote unquote default, be paid by the seller and the seller's agent side of things. After August 17th, things kind of changed. Now, even though things were always negotiable, now by default, the seller isn't going to be paying the buyer side commission. So this is now another reason why you need a buyer's agent that is out there through the trenches, fighting for their clients and making sure that they are able to negotiate and have the wit that you need to be able to get a good deal in place.
Yeah. How many times do you guys have a deal that you think that they got lost or it didn't go through, like, as a disservice to the client, and it was mainly part of the realtors?
I would say 1 out of every 5 deals. Wow. That if we were to lose one, I mean, I think we close 97% of our deals, but I feel like everybody you meet is a realtor or a part-time realtor.
Yeah.
So for me, I try to work with somebody as a full-time realtor.
Yeah.
We have tools where we can see production and see what somebody's closing. So we use that as a guide. Yeah. So it's a universal guide to kind of see like, okay, this person is full-time or this person is part-time. Obviously, the older somebody is, the more experience they're going to have.
Do you ever have a situation where you see like this person with that realtor is not really like giving it his all? Like they're probably not going to get a deal with it.
All the time. I mean, I have a deal right now in the pipeline that came to me 2 weeks ago, and the contract went into effect June 16th. We're like on day 70, and the realtor went on vacation.
Wow.
And it was the seller that I knew, right? And I helped a seller a few years ago purchase the home. And she calls me out of the blue. She's like, can you help me? The realtor's gone MIA. And this is from the seller side. So typically we don't really deal with too much of the seller directly. And I ended up having to salvage the deal. And the loan is closing tomorrow. But it was me getting involved with and doing a lot of the heavy lifting.
And who gets paid?
But realtors are fantastic. Call me. Yeah, they're all wonderful. No.
I mean, I think people underestimate the difficulty of that job, though. You know.
Yes, they think they could just show houses and get paid on it, and it's and you know
they look on the gram.
I know exactly.
They look on the gram and they're like, "Oh my God, it's amazing! I can do it."
It's logistics, it's communication. You know, consistency, and you know, you have to have some know-how of like laws, the market, the contracts, etc. And you can't just be getting a real estate realtor that does property, that does residential, and just jump into commercial or just jump into a business. Like there's just different worlds, you know.
Even as a new agent, you're learning a lot, right? Most agents who start off, they start doing rentals, and then they go into buying on the buying side, and then they become the listing. It's a progression, right? And it's not just like you're going to do it right off the bat. It takes time, and you got to hone your skills, just like anything else.
And another situation that I used to face often was, what are the difficulties you guys are seeing with like condo associations? I know there's some recent like regulation changes, and they're having like a committee that is supposed to be in charge of them, making sure nothing going on. But like, what situations do you see with condo associations?
Condos are. I've never been a big fan of condos.
Is that like the deal that you say, I don't want to do this?
No, it's just a completely different conversation, right? Typically, the pre-approval is credit, income, and assets, and you issue the piece of paper and they go house hunting. Yeah. With a condo, you're talking about a whole nother 20, 30 minutes explaining everything and asking, okay, do we have reserves? And how old is the building? And is there any special assessments and whatnot? So it's slippery slope, but there's new laws coming into effect in 25. A lot of the associations now are under the gun trying to meet these requirements. So it's going to be interesting what happens in 25 with condos.
So I'm sure you remember the Surfside building collapse.
Surfside,
yeah. So after the Surfside building collapse, our state legislator passed several laws that we think that ultimately in the long run are going to be beneficial to the community and to homeowners themselves. But in the short term, condo owners and people that are trying to buy condos are going to be taking a hit. Before, condo associations can essentially postpone collection of reserve requirements, meaning let's say you own a condo building, the condo building needs a new roof within the next 3 years, but then the condo board gets together and says, hey, listen, let's not save for this, let's just keep postponing it, right? Moving forward, as Cam mentioned, starting in 2025, the state is going to have certain appraisers that are essentially approved by them that are going to go out there and do a structural reserve study. And they're going to essentially say, hey, listen, you need a new roof within 5 years. You need new walls within 10 years. And now the condo and its board members are going to be held liable to make sure that year after year, month after month, they're collecting what they need to be. So what's happening in the short term is that condo owners and people that are trying to qualify to buy a condo need to have a lot more money saved and ready to go for special assessments, for homeowners association, and that's essentially taking a hit. And we're seeing it, and again, a lot of the realtors out there are seeing this as well. Condo prices are either stagnant or kind of decreasing, while when we look at townhomes, single-family homes, they're quickly appreciating at a higher value than the majority of the country themselves, while condos are kind of stagnant. And in the majority of the cases, condos are sitting on the market for 60, 90 days because they can't sell. Because, hey, listen, you have a condo, it's worth $300,000, but then you have a $1,000, $1,500 HOA special assessment payment. Nobody could really qualify that.
Or they don't qualify for the Fannie Mae or Freddie Mac guidelines. Like, you have that condo and they have litigations, or they don't have the reserve study, or They haven't passed their 40 or 50-year certification, so the person that's buying now can't get financing. They have to buy cash because nobody wants to touch it.
But traditionally, people go with, at least first-time home buyers go with FHA, no?
Yes.
You can't go into FHA.
And you can't do FHA condo.
can't do FHA condo.
It's like finding a needle in a haystack.
If I'm not mistaken, I think there's 3 to 5 condos in Miami-Dade County that are approved by FHA, so it is very, very
To jump off of that, I've been doing mortgages for 8 years, and I've done 1 condo FHA, in 8 years.
So what a typical person that's coming to you is gonna get first approved for an FHA, or like you're gonna what's like if I come to you as a regular person that wants a average home, what offers are you gonna give me? Because I've always done, people usually go FHA first.
Right. So we basically have an informal conversation, figure out what their objective is, what their goals are, and then based off of the responses, we will determine what's
the best one?
Which option. Yeah, it's not like we have any incentive to put them in one product over the other. It doesn't work like that.
But what do you see like the most beneficial product, I guess, or just
it depends on it. Yeah, it's not a one shoe fits all. It's each individual's credit and income and their ability to qualify for that.
Gotcha. So I would say, to jump with Cam saying, I guess FHA, the bubble that people that FHA fit in is somebody with a credit score of 680 or less. Would probably go FHA just because the rate's a lot better. If somebody has a lot of debt, they're living out of their realm, they would go on an FHA just because the debt to income ratio gets pushed a little bit more.
That's
FHA.
the most forgiving loan, more or less.
Yes, basically. If you have a great credit score, we're going to push you towards the conventional just because it suits you better. It's a little bit more down payment, but there's other factors that's not just the down payment. There's something called PMI that not a lot of people know about it, private mortgage insurance. With a higher credit score going conventional, that payment is a lot lower. FHA is just a standard amount no matter what your credit score is.
I'm glad you brought this up, Eddie, because FHA, a lot of people, when they hear FHA, they're like first-time home buyer just because of I guess the acronym itself. But that's not the case. FHA means Federal Housing Administration. And again, it does have lesser barriers of entry than a regular conventional loan, right? But a lot of people need to take into account that an FHA loan has a PMI that's going to live with them for the rest of the life of the mortgage. Also, it has an upfront premium insurance, meaning that the loan itself is going to get hit with a 1.75% premium upfront. So if you are good with your credit, if you have established work history, if you have the assets necessary, then we're more than likely going to put you into a conventional loan to save you money, both in the short term and in the long term.
What's the max right now for FHA? Like the max they can.
I think the loan amount right now is 621. 621. Am I right?
For the debt to income ratio or the loan amount?
The loan amount.
No, 621.
400.
Yeah, but in the last couple of years, it's gone up. Same thing with conventional. Conventional right now we're at 766.
If they see the market going up, they increase.
Every year, usually we get an update. Every year we get an update, and it's been going up ever since.
So what 10 loans are you doing? How many are FHA?
Out of 10 loans, I would say
1 or 2.
Oh, okay, so it's 20%?
Yeah, I would say like 20-30%.
Again, more than anything, an FHA is a really good fiscal instrument for people that do have lower credit scores and just trying to get their footing under them. But they would still need to qualify based off of certain factors.
I would say if it's somebody that wants to come in with a lower down payment, have a lower interest rate at the moment, and just to get them into the house so they stop renting, and then they wait, let's say, a year, they refinance into a conventional, and that's probably, which is what I tell people. If you're getting into this FHA loan, you're going to refinance sometime.
I feel like most people are like that. Like, I have a lot of friends. I just heard some crazy statistic, and I don't know if it's 100% sure or not, but it was, there's the same rate of people living between the ages of 25 and 35 with their parents than when it was after the Great Depression.
That's our, like, the millennials. We stay with, I mean, because we're Hispanics too, and they want to keep us. But when we want to move out, it's like, it's just, in Miami, it's very, very difficult. And the rent here is super high. I have no people that pay more rent than my mortgage, and it's crazy. So it's kind of like, you're paying 100% interest on your rent because that's what you're paying. You're paying somebody else's mortgage.
I've never seen it like that, but yeah, you are.
It's 100% interest rate. So if somebody tells you, my rate is at 8%, yeah, but it's yours, and you can always refinance. What is it that we always say? You marry the house and you date the rate.
That's a good one too. I get the business.
Yeah.
All right, so let's talk about the rate. A lot of people, in particularly me, I still don't understand that shit. So, like, if the Fed increases the rate, right? You were telling me earlier that would double my mortgage payment?
No.
Or my actual payment, or how does that work out?
In the prior administration, if you were buying a $500,000 home, that payment would come out with principal, interest, taxes, and insurance, and maybe even throw in a little HOA action, you'd be at $2,500. Today, that's double, at least $4,500 to $5,000 on the same house.
Wow.
Yeah.
What's the biggest culprit to that?
It's a multiple culprits. It's not just one factor. It's that they increase rates pretty quickly, but there was a ton of rate hikes in the last several years.
Yep.
Insurance premiums went up 100% in price.
That's crazy. Yeah, that's true too.
And
sometimes 300%.
And
for my condo, for my HOA.
And people just are living beyond their means, unfortunately.
Yep.
You know, and it's just increasing their debt to income ratio.
I have a story in regards to that. I have a client that I closed right after COVID. You know, the rates were on the floor, so a lot of people were refinancing and buying at that point. That same client called me, I would say 6 months ago. He would not qualify for the home he currently has right now if he were to try and buy it. Wow. He wouldn't qualify.
Right.
You know, and he was like, "Oh, I want to buy something else," and his income doesn't get there. But when he bought 2 or 3 years ago, he qualifies. Right now, that same house he doesn't qualify for because of the rates.
So, bro, on amortized people, like, what is the difference between going to like a new development or trying to buy like an existing home? Like, are there benefits? Do you see benefits to that, or?
I mean, you should take this considering your situation. You know.
So the biggest benefit of going to new construction is the closing cost help that they give you. Gotcha. So basically, they tell you, "Hey, we're going to give you this amount of money to do the loan with us, and we'll give you this as closing cost credit." But you got to look in the loan estimate, which is kind of where they break down all the fees. They tell you they're giving you help, but there's a home builder fee, there's a home site fee, there's fees here.
Or no?
No.
They're not going to negotiable.
No. So they put that in there. That's kind of how I'm giving you $20,000 of closing cost credit, but I'm charging you 10 or 15 grand for where the house is.
They said fee was like, semi-negotiable.
Más o menos, but with the builder stuff, you're kind of stuck with it, and
and you have the CDD and the taxes, which increases your taxes on new construction. So
you know what that is?
If you want to go into that.
So the builder built out the development, and instead of paying the VIG or the cost to the city, he decided to pass it back to the consumer.
No way.
Yeah, so that tax is on the house for the life of forever. So it's an additional payment that will never go away.
That's crazy.
And plus, you probably have an HOA. Like I have an HOA on mine, so more than likely you have an HOA on that. And if history shows, HOAs never go down; they only go up. So if you're starting at $150, and 2 or 3 years down the line, you're looking at $250, $300. So don't expect that HOA to go down. It's not going to happen.
So to your point about whether you should buy new construction, I purchased a pre-existing house from a seller that did live there for a while, and I asked for seller credits. Everything is negotiable except for when you're going to a builder. It's like take it or leave it because the next guy's going to come in
but unless like people aren't buying,
right?
Not our case right now.
But
especially
when I bought in 22, there was the ability to be able to negotiate a little bit, so I did, and it's all dependent on what you're looking for and where you want to be. Cool, man.
Yeah, the other thing about new construction is location, right? You're not going to find a new construction in dead center Miami. Like we mentioned earlier, you're more than likely going to be either super south or super north, right? So that's the other thing that comes into account, right? But every situation has its pros and cons, right? Like they mentioned.
I still don't understand the whole rate thing too much, bro. Even that's crazy, but like the rate set, is that what is it at right now?
Depending on the scenario, because we have, as a broker, we have something called broker and lender paid rate. So that's something that we discuss with every client. The big banks, which is what we talk about, they don't have that option.
They only have the lender paid option.
Correct, which is basically what banks charge you to do the loan. What banks charge you to do the loan, those big banks, they incorporate it into the rate. We have the option of whatever we charge to do your loan, you could pay it at closing and you get the much lower rate at that point. So if you go borrower paid FHA, you're in the low fives right now. Conventional, you're in the high fives, which we haven't seen that in a very long time.
I know that whenever you're buying a property, you got to get an appraisal on it.
Correct.
Right. You guys send the appraiser out, or how does that work out right now?
It's a third party.
A third party.
Yeah. So whatever.
Sent by your lender.
Yes.
Sent by your lender. And do you ever have situations where the client's like, I don't agree with that appraisal, or vice versa?
All the time. Yeah. I mean, the appraiser is the one that's going to make or break the deal.
Correct.
So, which goes back to your point on having a good realtor, right? Because if that realtor is showing you this house, the first thing you should be asking the realtor is, can you show me comps? If I'm gonna offer $500,000, you want to make sure that the property will appraise in that area. So it's important to know the neighborhood, right? So that assuming the appraiser goes out there and decides that the value is $490, now you've got to figure out how to get that $10,000 or that margin that you're missing. Either do you negotiate, do you walk away, or do you just pay it? So an appraiser is going to make or break the deal.
That and also a roofer. Have you ever had situations with, man, I know a lot of
Miami
roofers.
I mean, what house doesn't have it?
I have a friend that bought a house a couple of months ago, Carolina. She shouted to her husband. They bought a nice house. And she goes, she's a very nice person, So they go and they do the inspection. Everything was perfect. She decided to do a little remodeling. And when she tore down one wall, mold. When she tore down the floor, mold. When she had to do a whole gutting. While paying a mortgage on this end, while paying another mortgage on this end, and the construction costs. And she said it was a disaster.
So just to kind of add to that, so when you get under contract for a property, there's two main, pinpoints that you want to look at. Is one, the inspection, right? So the inspection, your realtor, when you're buying the home, find your own inspector, someone that you trust. You do your own market research, and you send them out to the property to check everything. Plumbing,
correct,
roof, all that good stuff, right?
That's what I was mentioning. I said roofer, but I was mentioning the inspector. The inspector has a lot of power, man.
Yes, that's another make or break deal, and you have an inspection period, which is usually 10 days. So if there's something wrong with the house, that's the buyer's choice to be able to back out with no penalty.
And I feel like most inspectors are trying to get the deal done,
At the end of the day, the inspector is going to get paid
no matter what.
But a lot of the times, they might be lazy. They might not want to go up to the attic. They might not want to do what they really need to do. There are certain inspection companies out there that go above and beyond.
Gotcha.
So you need to make sure you're doing your due diligence and hiring someone. When the bank sends an appraiser out to the property, the appraiser is going to do very similar things that the inspector is going to do. But more than anything, the appraiser is going to look at some of the back office stuff. Like they're more than anything concerned about the value of the property, right? At the end of the day, the lender is the one that's taking the majority of the risk in the transaction, since most of the time they're fronting the majority of the money. So they want to make sure, like, hey, listen, within the last 6 months, 12 months, what has sold around here, price per square foot, where are we at? And they want to make sure it's a sound investment, not only for the borrower, but for the bank themselves, right?
Yeah, of course. Yeah, because if the borrower doesn't pay, they got to steal that property and figure it out after.
Yeah, and I don't want to do that.
How often do you guys get like denials? Like if you have 10 contracts, or how often people
if we're doing our job right, then we're not getting denials.
Okay.
But it happens.
Yeah, I mean, if we can't close it, no one can. So
I like that. That's a good one. That's a good tagline too, bro.
Yeah, we do. We like to do our, like you said, our due diligence in the beginning. So if there's something that we see that might be a red flag, we kind of address it right off the bat. Hey, look, I have concerns about this, and we kind of get an answer for it before it goes into underwriting. We think like underwriters because we know what they're going to ask, what they're going to look for. So there's things that we're going to ask up front because we know it's going to be asked at the back end. So it's better to take care of it in the beginning as opposed to wait for it to go to underwriting.
Yeah, you move a lot quicker.
Right.
All right, so I've been hearing a lot of rumors of like a bubble happening, like prices going down. People are kind of worried or they don't know what to do. I want to get your guys like personal insight on like what you guys see, meaning that you're boots on the ground right now.
Well, first of all, we hear this every day. Hey, listen, I want to buy, but I'm scared when I buy this property a couple of years, a couple of months down the line, it's going to be worth less than what it is now. And it's a valid concern, I won't lie. But the reality of the situation is that we are still currently in a high interest rate market. What that means is that it's a little bit more difficult for people to qualify to buy the home that they want, right? We are in the middle of an election year. Interest rates are trending downwards, meaning that within the next couple of years, interest rates, we should see them stabilize and drop to a good amount. What's going to happen there is, logically, as interest rates go down, there are going to be more buyers in the market, meaning a lot more people are going to qualify to buy the home that previously they couldn't. Like we mentioned earlier, nowadays qualifying for a house is very dependent on the interest rate. So as interest rates go down, more buyers are going to be in the buyer pool. What that means is that there's going to be more competition. And simple supply and demand, if there's more demand than there is supply, because the supply problem is a whole different conversation than we had, there's going to be more people bidding for the same house that you want. So,
which is what happened in COVID.
Yeah,
if you remember COVID, you would do an open house. There were 60 families outside the house because everybody qualified because you were at 2.8, 3%. So you would put an offer, and the listing agent would say, "Well, there's 10 other offers here." And I remember this specifically. I don't know if you remember. offers had to be $10,000-$15,000 more than what the purchase minimum in order.
Appraisal contingency.
Yes, like that was COVID. You had to always, if you were offering purchase price, they wouldn't even look at it.
Brother, and what type of, like, are you seeing a lot of, like, foreign investors coming in, people from out of the country or out of the state at least? Like, what are the majority of the, are like, what's the ratio of foreigners coming in to buy and locals?
Yeah, if I'm not mistaken, 2023, 15 to 20% of the purchases in Miami-Dade County were foreign investors. And I think the biggest portion of that were Colombians, Canadians. There's people from Europe buying a lot of property in the States because at the end of the day, if you talk to a foreign investor, they'll always tell you the United States market is one of the most stable markets there is. Yeah. So if they ever want to diversify their own portfolio, they're going to look at qualifying and buying a home here. And it's actually way easier than you think to get a piece of the pie here. So not only is the local Miami real estate market being affected by people from New York, California, but it's also being affected by people from Colombia, Canada, that are also wanting a piece of the pie, right?
Like when Petro came into Colombia, everybody was selling everything out there and trying to push them here. Yeah. And it happened with Argentina. It's happened with Venezuela. It's happening.
Yes, it's happening.
And it's always a boom, and everyone comes to Miami. You know?
Everybody wants to be here.
You can survive here in this city with just speaking Spanish. Just if you spoke Spanish.
It's almost like it's a primary language here already.
Yeah, it is.
If you don't speak Spanish, they speak to Cam thinking he knows Spanish, and he's got to tell him, "Hey, listen, I don't know Spanish." But
Manny
they
did that to
automatically
you right now.
Yeah, Manny.
Yeah.
Manny did it. They automatically assume, like, "Hey, you know Spanish."
I mean, I'm Iranian. I was born and raised here. Yeah, but I understand it more than I can speak it, and
We've been.
I've gotten better. I've gotten better. Yeah.
Don't worry, all documents are in English.
No, yes, everything you're signing is in English, but everything Manny was saying in Spanish, I understood.
I think it's taking you some time, but when you first got to Miami, you're like, "What is this?"
I was looking up the translation dictionary. Yeah.
All right, I have a question that's like a personal one, but I see all these commercials about it, and I don't really quite understand it, and I kind of wanted to like lean on you guys a little bit. What the fuck is a reverse mortgage, and is there any benefit to it at all, or is it just like a scam for old people?
I'll take it because I have white beard in my head.
Salt and pepper, baby.
So as you get older, right, you're not going to be working, so you're going to need some form of income coming in. So if you're in a position as an elderly person of 62 years or older, you can go to the bank and say, hey, can I get money off the equity of my home? Okay. It's a long process. We refer that out to a specific reverse mortgage loan officer, and they sit down. It's a full-on consultation with the family, and essentially the mortgage company will give you either a draw, a monthly stipend, or the full nut at the end of the loan. Like the loan process, and that person lives off of those incremental payments, the full lump sum, and they'll be able to pay for their daily activities.
While living in the house.
Right. And then when they pass away, the bank takes the house, but it's not like right away. It's 12 months that the family has the opportunity to either pay back the money they borrowed, or they sell it and have a nice day.
My grandmother is currently in a reverse mortgage.
So it's not like a big scam.
It's not.
No,
it helps.
No.
You
Go ahead. The commercials are super cheesy. Yeah. They have this elderly person. Hey, and it's a real product. It's really important, but you just have to know how to navigate to get it.
That's crazy. Okay, so for those people out there that I saw many cases of. They're working with a realtor, they're working with a broker, and they're just not getting anything done, Why should someone call the mortgage group? Why you guys,
Why not, right? So they should absolutely call us because we answer the phone. I have eaten for the last 6 years off of other people's inability to pick up the phone on a Monday, on a Saturday, on whenever, right? And it's a phone call. It's not like and this entire process is all over the phone. It's not like you have to go to the bank, put on a tie, and sit down and wait for someone to tell you yes or no. You pick up, you have an informal conversation. If it makes sense, you help them out, and that's it. And that's why the three of us got together. Because we have that mindset.
And I mean, from my personal experience with Brian, it was always like that. It's a very right.
And you got me new. You got me in the beginning. I was still learning, and things have changed from then to now.
It was. It's a lot of communication. And if you're communicating and you know how to do your job.
And I think transparency and being honest. So, like I said from the beginning, we analyze everything from the beginning. And if we see something that's a red flag, we let them know, hey, I think this might be a problem, just so you're aware. I've always worked that way, and I like that. And I have clients come back because one of the things they tell me is you were honest with me, and I appreciate that. An example I can give you is when somebody's purchasing a property, they look at taxes. The taxes might be very, very cheap. And I tell them, hey, we might use this to qualify you now, but be aware, come November, your taxes will go up. And not everybody tells them that. And if the brokers don't tell them that, they get a letter from the bank, hey, you're short escrow, your mortgage payments are going to go up now, $500, $700, or you give me a one-time lump sum payment. But I give them that heads up, hey, it's going to come, so just be aware of it. It's happening. And by them knowing that, it relieves the stress out of them as opposed to them getting a surprise letter from the bank. So it's all about honesty.
Are the majority of the people you're getting right now like owner occupants, or are you getting a lot of investors?
Mixture.
What do you say?
It's mixture. It's again, some people are kind of waiting, but people coming in the market right now are investments.
Investment. And do you see like you guys can do mortgages out of the state, or
So
do you see people going out of state and asking for help, or not really?
We kind of see the opposite. A lot of people are wanting to move into Florida. But yeah, we could definitely do investment purchases outside of the state. There's a new program out there that's called DSCR, which is debt service
Coverage ratio.
debt service coverage ratio, which essentially the bank really doesn't care how much you make. All they really care about is the property itself. So they're going to compare the property and the potential rental income the property is going to produce to how much the mortgage is going to cost you. So, for example, if you're going to rent it out for $3,500 and your monthly mortgage payment is $3,000, you're good. The bank is going to approve you for that loan. So, this is a new product that's in the
have a
market.
contract in place already.
It's a regular purchase contract. The difference is when you take an application where we call a 1003, we would put your employment information. On a DSCR, we leave that blank. They don't care what your job is, what your income is. They don't care about DTI. All you got to show the bank is assets and credit. That's it.
Do you think that there's any way possible, or do you see what happened in 2007, 8, that can be replicated again right now, or is there too many like barriers already to protect us?
So so I've been in the industry for over 20 years, and I was in the mortgage industry during subprime. The difference between subprime and now is that we were closing our eyes and improving loans. There was a product, it was a 80% loan and a 20% second. So it's 100% financing. And if you're a first-time home buyer, you showed them 12 months canceled checks or a verification of rent, you got the loan at 100%. So there's no vested interest in these loans. And there was a lot of what's the word? Fugazi stuff happening back then.
It's an Italian word.
Yeah. But no, the pendulum has swung after 2010 when they enacted the Frank Dodd Act, and a lot of the consumer CFPB was implemented. There's a lot of regulation in place to prevent that happen. We're not a reactive. It's after the fact that we always put in levers and things to protect ourselves. So there's more
Preventive measures now.
Yeah, there's more preventive stuff. So there's too much safeguard.
So at that point it was like the realtor, the broker,
the appraiser,
everybody was in
the
it.
inspector,
Which is why we
was just like, okay, don't worry, you got a pulse, okay, you got the loan.
You got the loan.
Basically,
Yeah, that
yeah,
was it. Yeah. That's why we cannot speak to the appraiser directly. We have to speak to a third party person that then communicates to the appraiser. So if we speak to the appraiser, we could lose our license. So we can't even speak to an appraiser now.
I know that.
Right. And there's too much value, too much equity now versus back then. And if you remember, in 2010, we had Bush, who enacted the HARP program. So instead of people walking away from their home because they were upside down, you could refinance at 125% equity and save your home. And that was implemented under Bush. And then I think it went into after that. It was a phenomenal product. It recirculated a lot of people going back into the market and creating an opportunity for refinances.
For anybody that wants to get into your industry, right? Any young mortgage broker,
Sure,
absolutely. Again, like, what do you think is the top things that you need in order to be successful in your field?
You just take this, right?
Yeah, I mean, out of all three of us, I'm kind of the newest. I've been licensed since 2019. The one thing I have, the one nugget I guess I have for potential people considering coming into this industry is you got to be ready to pick up the phone. You got to be ready to network, and you got to be ready to grind. So at the end of the day, the more people you know, the more hands you shake, the more business you're going to get through the door, right? So obviously you need to have your good base of knowledge. You have to know what you're talking about, right? But even if you know what you're talking about, right, if you're not connecting with the right people, if you're not having those conversations, right, and networking, then you're essentially not going to get business through the door. So that's my main nugget there.
And you got to have a good relationship with your broker, support. Like you have me and Cam. So I think that is very important. You know, if you have questions, you have somebody that can answer those questions.
Yeah.
Because I know when I started, I had a couple of people that helped me and kind of pointed me in the right direction.
Who was that?
Not you.
Anybody you know?
But the thing is that, like, man, you guys, like, you can mess up one little thing and ruin someone's file, and, you know.
So I have another saying for that. We get all of the blame and none of the praise. The mortgage brokers. If something goes wrong, that has nothing to do with us. It's our fault. For example, the condo. If something happens with the condo, why didn't you find out before? Yeah. Well, because I can't get that documentation until they send it to me. So we get all of the blame, and we have to be. You got to be aware of that and be ready for that. Right. Something goes wrong, it's our fault. It's not the realtor's fault. It's going to be our fault always.
You asked this question earlier. Why the mortgage group, right? So yes, we have the industry knowledge. We know what we're doing, right? But at the end of the day, Brian mentioned just now, is that we're essentially quarterbacking the transaction. And you know it, being in the industry yourself in the past.
Being the quarterback for my flag football team.
It's not easy, bro.
It's not easy. Well, there are multiple people in the transaction. There's the realtor, there's the mortgage company, there's the title agent. Sometimes there's a lawyer involved, right? And we all have to work together to make sure the transaction works. And a lot of what we do and a lot of what we pride ourselves in is essentially being the quarterback in that transaction, being the glue that holds everyone together, and kind of middlemaning that conversation and making sure everyone is doing what they need to be doing to make it as smooth and seamless for the buyer.
Excellent. But a pleasure, man. A real pleasure having you.
Thank you for having us.
Thank you, Eddie, so much, man.
You're the man.
I never thought that I could be so interested in getting mortgages, bro.